OPEC just pulled a power move that's shaking up America's energy game. For a while, the US seemed to have the upper hand. Oil production at home was through the roof. Natural gas exports were booming, and Washington had a clear message. We've got this. We don't need you anymore. But OPEC wasn't about to sit back and watch. Instead, they tightened their grip, slashed production, and cranked up prices on their terms. Just like that, the balance of power started shifting again. This isn't just about the price of oil. It's a strategic play, a high-stakes battle for control. And OPEC isn't making moves randomly. This is all part of a bigger plan. Here's what's really going on. For years, the US flooded the market with shale oil, cutting into OPEC's dominance. Countries like India and those in Europe, once loyal customers of OPEC, started looking to American energy instead. That didn't sit well with the cartel, so OPEC struck back. They pulled supply off the market, squeezed inventories, and sent prices soaring. The goal? To remind the world that they still call the shots when it comes to oil. The US had built its energy strategy around being a production powerhouse. The plan was simple: drill more, drill fast, and flood the market with cheap oil. Under Trump, federal lands were open for drilling, production hit record levels, and for a while, it seemed like America was on the verge of true energy independence. And in many ways, it worked. More oil, lower prices, and a weaker OPEC. But there was a catch. Pumping more oil is one thing. Controlling the entire market, that's another story. And now with OPEC pushing back harder than ever, cracks in the US strategy are starting to show. But OPEC isn't just one united force. It's a mix of countries with their own agendas. And the biggest rivalry of all? Saudi Arabia and Iran. Normally, they'd be at odds. Right now, though, they're on the same page. Iran wants OPEC to stand together against US sanctions, while Saudi Arabia is using its influence over production to keep prices high. It's a fragile partnership, but for now, it's holding strong. And that's making OPEC's response even more powerful. If the US chooses to flood the market with oil, it could trigger a high-stakes standoff with OPEC. On paper, the strategy seems logical. Overwhelm the market with supply, drive prices down, and force OPEC to reconsider its production cuts. But in reality, this move comes with a set of serious risks. First, it's important to understand how OPEC operates. Unlike the US, where private companies drill and sell oil based on market demand, OPEC countries coordinate their production levels to manipulate prices. If the US starts pumping out excessive amounts of oil to lower costs, OPEC could retaliate by cutting production even further, tightening supply and keeping prices high despite American efforts. Then there's the issue of storage. Oil isn't like a product you can just pile up in a warehouse. If there's too much of it and not enough buyers, storage tanks fill up quickly, and producers are forced to either slow down production or sell at painfully low prices. We've seen this happen before. Remember when oil prices briefly went negative in 2020? A repeat of that scenario could spell disaster for American producers. OPEC's influence isn't just about how much oil they produce, it's about the kind of oil they control. As mentioned earlier, US shale oil is light and sweet, while many refineries need heavier crude to operate efficiently. Even if the US floods the market with its own oil, it doesn't fully replace the type of crude that OPEC supplies. That means American refineries would still need to import, just at a higher cost. There's also the financial aspect. Many OPEC nations, especially Saudi Arabia, have deep pockets and can afford to wait out a price war. Meanwhile, US oil producers, especially smaller shale companies, operate on much tighter profit margins. If prices crash too low, many of them would struggle to stay in business, giving OPEC even more control once American competition weakens. Beyond economics, there's a geopolitical element to this energy battle. OPEC is not a single unified entity. It's a collection of countries with different interests. But when it comes to countering US influence in the oil market, they're willing to work together. Saudi Arabia and Iran, historically bitter rivals, have found common ground in limiting supply to keep prices high. Meanwhile, Russia, another major oil producer, is also playing its own game. With Western sanctions limiting Russian oil exports, Moscow has been finding ways to bypass restrictions, selling crude to China, India, and other nations. The more chaotic the global energy market becomes, the easier it is for Russia to maneuver around sanctions and continue funding its economy. On the flip side, the US could take a softer approach, diplomacy. That would mean negotiating with key OPEC members, especially Saudi Arabia, to ease production cuts. But this too is tricky. For one, the US has a complicated relationship with Saudi Arabia. While they've been strategic allies for decades, tensions have risen over human rights issues, military conflicts, and shifting global alliances. Convincing the Saudis to increase production might require some serious concessions, perhaps security guarantees, weapons deals, or economic incentives. Even if Saudi Arabia agreed, that wouldn't mean the entire OPEC cartel would follow. Countries like Iran and Venezuela, both of which are under US sanctions, may have little interest in cooperating with Washington's plans. And without full OPEC support, any deal would have limited impact. Both strategies, flooding the market with US oil or negotiating with OPEC, come with major risks. There's no easy way out of this situation. If the US pushes too hard, it could trigger a price war that ultimately backfires. If it plays too soft, it risks losing even more influence over the global energy markets. For now, all eyes are on the next move. Right now, every move the US makes is like walking on a tightrope. One wrong step and the entire energy market could tip into chaos. So what's really going on? This isn't just a disagreement between the US and OPEC, it's a global shakeup, and everyone is feeling the pressure. Countries that depend on imported oil, like India, China, and much of Europe, are watching closely. If this standoff drags on, energy costs could skyrocket, and supply shortages might hit hard. Some nations aren't waiting around to see what happens. India, for example, is securing long-term deals for American liquefied natural gas, LNG, to cut its reliance on OPEC oil. Europe, still stinging from past price shocks, is doubling down on renewable energy, hoping to break free from oil dependency altogether. This isn't just about today's crisis. It's a high-stakes game of survival. The countries that move fast and adapt now will come out on top in the long run. But while some struggle, others are seizing the opportunity. Russia and Iran, they're stepping into the gaps left by OPEC's supply cuts, securing energy deals across Asia and the Middle East. While the US and OPEC lock horns, these players are quietly expanding their influence. Then there are smaller nations making big moves. Malaysia and Vietnam are positioning themselves as rising energy hubs, ready to take on a bigger role in global trade. In any crisis, there are winners, and right now, the ones who move fast are the ones shaping the future. And let's not forget the impact on everyday people. For the average person, this isn't just about international politics. It's about the price of gas creeping higher, heating bills going up, and groceries getting more expensive. Transportation costs affect everything. The more fuel prices rise, the more it costs to move goods, and that means higher prices at the store. In some places, even electricity rates are tied to oil prices, which could mean unexpected spikes in utility bills. How long will this last? That's the big question. But if the market stays unstable, those higher costs could stick around for a while. OPEC, though, isn't playing a short-term game. They're looking far beyond just the next few months. This is about long-term control, keeping their grip on the oil market, making sure they stay essential. Countries like Saudi Arabia and Iraq aren't just adjusting supply, they're planning for the next decade. Iraq's recent discovery of a massive oil field near Baghdad is just one example. While the US focuses on immediate strategies, OPEC is thinking ahead, securing its dominance for years to come. Their goal? Simple. Stay in control, stay indispensable, and make sure the world still depends on them. The US isn't sitting on the sidelines, it's making moves. But energy strategy is getting more complicated by the day. Drilling on federal lands and tapping offshore reserves have helped boost US oil exports, but that alone isn't enough to counter OPEC's latest play. Now the debate is heating up. Should the US ramp up domestic production even further, or is it time to go all in on renewables? Neither path is a quick fix. Expanding oil production takes years, not months. And while wind, solar, and battery technology are advancing fast, the world still runs on oil. There's no flipping a switch to replace it overnight. That leaves the US stuck in a balancing act, pushing for energy independence while still relying on the very global markets it wants to break free from. Whenever oil prices surge, renewables get a fresh wave of attention. But how realistic are they as an immediate solution? China, for example, is pouring billions into clean energy, but it hasn't ditched fossil fuels. Instead, it's keeping reserves stocked to avoid future energy shocks. The US is eyeing a similar play, diversifying its energy mix while acknowledging that oil isn't going anywhere anytime soon. Meanwhile, markets are on edge. Every OPEC decision sends ripples through oil prices, and investors are watching closely. Right now, everything depends on what happens next. If OPEC sticks to its strategy, oil prices could stay high, putting more strain on consumers and businesses alike. But if an unexpected production boost happens, prices could drop fast, though not without serious political consequences. Then there's Russia. With Western sanctions squeezing its oil exports, the global market remains unstable, adding yet another layer of uncertainty to an already tense situation. So, where does this go from here? A few scenarios are on the table, and each one could shake up the energy market in a big way. One possibility? A prolonged standoff. OPEC refuses to budge, keeping supply tight and prices high, forcing the US to scramble for alternatives. That means higher costs at the pump, pricier goods, and rising expenses for businesses across the board. Another option? A short-term truce. Diplomatic efforts could temporarily ease tensions, but without tackling the deeper issues, another showdown would be just around the corner. Then there's the wild card, a global energy shift. If more countries start prioritizing alternative energy sources, OPEC's grip on the market could weaken over time. The transition won't happen overnight, but every step toward diversification reduces dependence on oil-rich nations. Now, the big question, who makes the next move? Will OPEC stay firm, keeping prices high and supply limited? Or will the US step up with a bold strategy to shake things up? If you found this video interesting, be sure to hit that like button and also subscribe so that whenever we post, you can be the first to see it.